And good evening. This is the Elliott wave update for the S&P 500 and the NASDAQ 100 for Thursday, September the 14th, 2023. Today's release of the of the PPI showed once again the largest increase in the last 14 months. And so inflation is still around. But as I alluded to during yesterday's update, that the response that we got from the CPI number also coming in the highest it's done in 14 months, or the largest gain, I should say, in 14 months, produced a pretty strong upside move. So, and when I got today's number, I was a little bit more prepared, let me say, that initially they drove it lower, and that was great, and as soon as they started to buy it, joined the party. And it ended up being some really solid, nice trading to the upside. Now, I will say in the first couple of hours of trading this morning, it was fast, it was quick, it was jerking around to both sides, but not 100% impossible to trade. And depending on what your risk profile is or how you can handle those types of moves, particularly in the NASDAQ, I will say, they were quicker. The market normally on an opening can jump between $3 to $5 to $7 at a clip, and today those moves were $10, $15, $20 at a clip, NASDAQ dollars. So and it's $5 a tick, $20 a point, and it's moving 10 or 20 points within a minute. So it was pretty quick and throwing itself all over the place. So it did take a little bit of, I hate to use the word experience, but just an understanding of how to manage your risk and how to read the market. But once you were in tune with that, it was a good day. It was a good day to trade because once trends punched into line, for example, we had this very strong sell-off. It was likely at the 10 o'clock to 10:30 time frame, so it would have been right in here. So it kind of started there, we got it, and then we drove all the way down and we went to which ended up being, I believe, session lows for today's session, and then just kind of plowed higher and then continued just to plow higher. So I'm starting here with the S&P 500, and I'm beginning on the hourly chart, and I just want to review a couple of things that I really do want to review to make sure that I'm being clear. Is that what I present is what my Elliott count basically is the way it's being left at the end of that trading day is telling me, but I give both sides. So I give an upside and a downside and what to expect or where those break points would be that would push to an alternate count, which I'm also going to review again tonight, because that's what happened today. We jumped above 45.41 and we kept going, and that pushed the alternate, which was just suggesting that I had put wave 2 here, and what that suggested on that break above that high was that wave 2, the minute wave 2, was not complete and remains in progress. So, and I believe I even said if it breaks here, we're going to be looking for 45.55. A break above 45.55 takes us up to 45.75, and a break above that level raises the chances and remains in force right now, raises the chances that the minor wave 2 is still in progress. So how I come about these, it's like this is the count as I have it, but I have alternates which would suggest that, okay, the move is going to continue. And how do I come up with that too? Well, part of it would be is that we had an ABC up. I'm looking for an ABC up after we got that minor wave 1 complete. That came in like a T, came in clean. That puts the minor 2. And then we got what I thought was a 5 down, and so I'm labeling that minute wave 1 of minor wave 3. So, but how would that change? Well, it would turn into an ABC and an X wave if indeed the market decides it's going to break and then break above 45.98. Why? Because a second wave cannot go beyond the starting point of the first wave. If that's the case, it's not a wave two. It's not a correction of that. So therefore, this would be in continuation, and it becomes an X wave. And what we're looking for is a second ABC. Now, and we're still getting that ABC, but it's now extending. So within the context of the minute wave two, it has to basically keep itself below 45.98. That was that high on the 1st of September. A break above that level, this comes off, this moves over. And again, we're still in that ABC. So if it holds below here, it will still be in that ABC, but then it's still going to remain a minute two, and the market should still really turn and fly lower. If it goes above it, it's still going to remain a wave two. It's just going up a degree, and it's still going to be that the minor wave two is still in play. I'll flip out to that 4-hour chart so we get a little bit better look. So here we have minor one, right? The completion point of all of up to the primary B wave. So we're in starting from that top, we're in a primary C wave going down. It will consist of 5 waves of intermediate degree, labeled 1, 2, 3, 4, 5. That's the yellow. Those are intermediate degree. Coming down a degree, what's going to be inside that intermediate wave 1? 5 waves of minor degree. So there's minor wave 1, minor wave 2. If minor wave 2 is still in progress, then this would then be ABC. This has to move. If it breaks above this level, this becomes an X wave, which is the intervening wave pattern in between a double ABC, X, ABC. So we would be still, in an ABC. So if this continues to plow and goes a 4 and a 5, and we end up breaking above there, it's just going to flip the degree of this second wave over, and it'll continue to be a minor wave 2. So what would be the alternate beyond that? Beyond that, the alternate would be if it breaks above this high, which is 46.85, then the primary B wave is still in progress. And what this then turns into, instead of a minor wave 1, it turns into minor wave 4, because then we're going to be taking it from here, and this high becomes minor wave 3. And so this all then becomes minor wave 5. But it already is kind of telling me probably not, because I'd have to be able to look at this as it's forming a diagonal triangle. And right now, I'd be connecting these, and I'd be connecting these, and they're just forming channel lines right now, versus actually, I'd have to connect the top of, this would be wave 1, this would be wave 2, 2 would connect to 4, 1 would connect to 3, but it has to start to diagonal. So in other words, it has to start forming a wedge as it goes up to the pinnacle, as it gets up to that top. I don't see that happening. So it remains an alternate count right now. So I'm going to go back down. I'm going to go back down to the hourly. So you can see on the 4-hour chart, how wave 2 can get up and get as close as it wants, just cannot exceed. So we broke above 45.55. We're pulling back down. At best is what I can see from here. We got a 1, 2, and a 3. Maybe we get a 4, and we still get a 5, and that maybe bring us up as close as it wants to get to 45.74. Now, what's kind of behind all of this? Because on top of all this, we do have 2 days where inflation is continuing to rear its ugly head, and crude oil, $2 today. Crude oil has jumped $12 in a week. Right, we can look at that, $12 per barrel. So that's inflation, and that's going to come down the line, because how does it come down the line? Well, it gets refined, and then we're going to be paying $5 a gallon here in California or above. We're already at $5 a gallon. Is it going to be $5.10, $5.15, $5.25? How's the price of gas? That's inflationary. It's costing us more. So again, what's the resolve to that? Well, the Fed, as they've said, in order to gain control, they raise the interest rates. They make it a little bit more expensive to have money, to borrow money, because you got to start reeling it back in rather than giving it out. You got to reel it back in. And it does create pain for those of us on the retail side, which is basically all of us, people, because we're paying more. We're paying more at the grocery store. We're paying more at the gas pumps. We're paying more for our own utilities. We're paying more for the products that we use. Inflation is not something that works. Inflation is not something that benefits corporations. So this whole move, what is it really telling us? What's really going on? And it was, well, if we keep it on a technical basis, we can fill in all the blanks. And so on a technical basis, I believe that all this week, most of these rallies and the strength of these rallies has been because of options that expire. Now, we have a quadruple expiration tomorrow on Friday the 15th. So quadruple means we've got them expiring in equities, we got them expiring in treasuries, we got them expiring in commodities, we got them expiring in precious metals. We've got a lot of stuff going off the boards tomorrow. So that affects many, many different markets. Now, on top of that, we've had basically zero DTE options, which I don't want anybody to get the wrong impression. I am not against zero DTE options. They have added tremendous volume to our markets, both the options wise and the futures or the underlying, tremendous volumes. Now, I will note today, this future, both the S&P and the NASDAQ, a little bit on the light side. For the amount that it was moving, a little bit on the light side. So really, to me, again, because I watch these things, I noticed in Apple, they came up, they monetized puts and calls. Strike prices that are going off tomorrow, they're going to figure out their positions and they drive it down. That monetizes the puts. When they're done, that's over. We'll get rid of those, and the stock goes straight back up. What do you want monetizing next? The calls. Get there, that's all done. Then what's up next? So that's going to continue double time tomorrow, and it will go to the SPX, to the ES, to the NQ, to the Qs, to the SQs, TQs, to the spiders, to the diamond, to you name it. They all have options that will expire tomorrow, and it's going to be based on a strike price. And your market will go to these different levels as options come in the money or out of the money. And then we're dealing with gamma flows, a whole other conversation. Please just leave it to say that it's going to get probably a little bit crazy tomorrow. Now, these rallies, except in the Dow rallied strongly today. But the NASDAQ up 125, yeah, it's a nice day. It's a nice rally. But in terms of, we've seen it's like when it's up 200 or 300, that's a real good push. That's a real strong push. We still had stocks that were getting annihilated today. Apple was down great part of the day. They opened it. Then Netflix got absolutely hammered today. NVIDIA only closed up less than $1, was down most of the day. So we get this balance where the rallies were good, but they were limited to different levels. That, I think, can continue tomorrow. So let me just double check, because I have to want to make sure. I don't remember. I think we do have something coming out tomorrow. So yeah, we do. So tomorrow we have at 8:30 a.m. we have U.S. import prices, the Empire State Manufacturing Survey, 9:15 industrial production, along with capital capacity utilization, and at 10 a.m. consumer sentiment. Not as strong as what we saw today, but they could have a little bit of a push. Again, we're starting that both the CPI and the PPI coming out with the largest uptick that we've seen within them. largest increase in the last 14 months would have a better, longer lasting outcome. It didn't. Now, you know that in all of the financial media, they pull everybody out and they say, well, let's talk about what the Fed's going to do. Let's talk about what the Fed's going to do. Obviously, they're not. Look at what the bond market's doing. They're not really saying anything. Bond market took a little bit of a rally and then took a tumble. So they did pay attention. They did pay attention. So again, we just need to keep our eye on what's happening right in front of you. That's the other thing. I'm going to try to give you both sides. So let's get back to here. Let's get back to that hourly chart. Right now, I'm still looking for a little bit of a pullback. I don't know if we've got it already, but I'm looking for a little bit of a pullback in a wave 4. And then we get a wave 5. Now, is that done? 1, 2, 3, 4. Nah, too small. So I think that it could just be 1, 2, 1, 2, 3, 4, 5 of 3. We get a 4, and then we get a 5. And that maybe brings us up to 45.75 or even a little bit higher. We have continued price resistance between 45.74 and 45.82. And then we have a little bit more, 45.91. So we've got it all the way up. What the market can't do is break above 45.98. If that occurs, it immediately shoves it over, and this minor 2 gets pushed over. And then what we're doing, we're really raising the bar, and it's going to come in at 46.07 to 46.80, 75.80. And then I'm going to go back out to the 4-hour chart to show you that then takes us out to the top of wave B. So a lot's on the line right now in terms of how this all clicks in. But my bottom line now, and to tell you the truth, whether wave B is not done and we continue to go up and we get up closer to 4,800 before all is said and done, what comes next is still going to be dramatic. So, but how do you want to play it is what's going to be important. Because if you're shorting it here and you got to run up to here, you're going to be cussing at me. So hedge, people, hedge, trade intraday, because the ultimate response is still going to be that when this is all done, whether it's here, here, or here, is that we're going to turn and we're going to nosedive, and it's just not going to be pretty. So all of this, well, we got to get long. That may be true, but keep it in the right time frame. This isn't a new bull market. This isn't something, okay, we're just going to the moon. You got to realize it's like, where am I going to put that? What's going to be the catalyst? Interest rates are going to go down, or interest rates are going to go up. If interest rates going up is the catalyst for the market to go up, that's nuts. I'm just going to leave it right there. Now, back to what we can see for tomorrow. Again, right now, because we're above here, we might come down and we might drop back down to 40, 45, 41, 42, maybe even down now, the 20s at 41. And maybe, I don't think it's going to drop all the way back to 45, 32, but it could. Just cannot get below here. 45.31, I'm going to call it. I don't want to see it below there, because then wave 4 would overlap wave 1, and that would not be, then this is something different. It's not a 5-way structure. So in other words, it's like, we got a lot going on, but those are the levels. If it comes back down, even overnight, breaks below this level, then this ABC and that 2, it's done, and we're dropping in a third. Now, if it holds above it, goes above and gets above 45.75, but starts heading, but doesn't get above 45.98, then it's still going to be a minute wave 2. A break above 45.98 suggests that all of this, that the minor wave 2 is still in progress. Then this becomes X, A, B, C, and we're still likely going to get stuck here at 46.07 or somewhere above 4,600 to complete the minor 2. Still, what comes up next is a decline. But you got to live through that. And you knew, and actually, you're going to want to be able to trade it. And there'll be several different ways. I do not recommend trades. That is not my position or my job. But there'll be plenty to trade. So again, if you're a position trader and you're just trying to build a short position to capture what's coming, you're likely going to go through a little bit of pain if you're already short, and many of you are. You could hedge. There's different things you can work a position. Again, I'm not the one to be dictating how and what you trade. But I will tell you, I will be trading direction. I will be trading what the market is doing intraday tomorrow. That's what I do. And I trade price action. So again, it's what the candles are telling me. It's what the price action is telling me and what the market is actually doing. Now, as a day trader, and I day trade basically the NASDAQ future, there's plenty to do. And there's plenty of time you stand aside because it's confusing, and there's plenty of time you jump in. Here in the S&P, both sides. I do believe we pull down in a wave 4. 45, 41, 42 seems like very good level to pull down to and then rally again. Anything above the current high begins to fulfill the necessary process to complete this move. We have resistance at 45.74 up to 45.82. If that level starts to get exceeded, we can get as close as we can to 45.98 without breaking it. If it breaks, then this is the first level. And then we have, I think, 45. We don't really have, it goes 618, then equality, which puts it way up here. I definitely am not really looking for it to get up that high, because I do believe that B wave is complete. So I'm going to be feeling I can get in here. And the fact that we're in 1, 2, 3, 4, and this would be the 5th, it would have to be a very extended, very powerful 5th wave. So putting that all into perspective, 45.75, yeah. That I would definitely look for, up to 82, and maybe as close as it can get without going over, is what I'm basically feeling. Now, downside. If it doesn't here, and what we do is we get a downturn and it breaks below 45.30, then this wave is breaking what would be considered wave 1 of 5 for wave C, giving us a high suggestion that wave C is done, and so is a minute wave 2. So I'd be looking for it to actually get down there, break it, and keep going, and break 44.85 and keep going. Because we're going to be getting more signals that it's all done. It's all done. Moving average-wise, I'll tell you what also supports that this market may just sit flat until next week. Right? So we may get up here and break. They may go push this simply because people are going to cover, people are going to get excited, people are going to be like, it is moving on higher, higher, higher. And so it just goes based on how things are trading. And if that's the case, this 200-day, this 50-day moving average on the daily, right? For this is the EMA. Well, now it broke and it closed above the SMA. That gave it this little extra push to get it way and close above there, because okay, we're above that 50. We're holding this 50. Both are flat. So it would not surprise me that the market hangs out between the two of them until we get our decision next Wednesday. Now, that's a long time to hang out. That's a bunch of ABC, XABC. It could just keep rolling in a wave 2. Okay, so here we have the picture. Take it back down. We have the picture here and here. We got this rolling back and forth, back and forth, back and forth, back and forth. And one side doesn't break the other, but it can stay in between it. So it could be ABC. We get it next, and we do another ABC, all between tomorrow and next Wednesday. So we have upside, downside. But if it breaks this wave 1, and then again breaks here, now I'm going to say wave 2 is done. Remember, wave 2 cannot really, it can't go this direction. It can't exceed the starting point. It can exceed the ending point, because it would be in terms of, it would have an irregular 2. They're not that common, but I'm seeing more of them. So we got a lot going on. Best scenario, it sits between. You just move back and forth. And then it's good day trading. It'll drive you crazy if you're a position trader. Over in the NASDAQ, it basically is doing the same thing, had a little bit more oomph today. But here I've made my adjustments as well. We have minor wave 2. And we have minute wave, minute wave 2 still in progress. So minor wave 2 complete, minute wave 1, minute wave 2 still in progress, minute wave 2. We have the A and B of minute wave 2. We're in the C wave 1, 2. This was kind of strange, but I'm going to leave it alone for right now. Maybe that was the 4. I don't know, but I'm going to give more time for it to come down. But I'll tell you what, if this is wave 1, it's already come down. It's been breaking this thing forever. But in a wave 4, it can't. In a wave 3, internally, it could. But a wave 4, it can't. So again, it depends on where we want to put that wave 1. So we're getting tight here in terms of what the market can and cannot do without breaking the pattern and telling you it's something else. But here, we broke above 15,695, 694, 696 actually was that high. We broke above, came back below, but it opens the door for it to get to the 100%, which is 15,755.56. Up here, minor wave 2, we feeling right now has completed at 15,850. So this wave 2 cannot break above that wave 2. If it does, the minor goods moved over, and we're heading to 15,970 something. That's the high of primary wave B. Now, we've talked all along that all of these minors, all of these waves can get as close as they want. They just can't break them. So minor wave 1 started here. Minor wave 2 cannot exceed that starting point. Minute wave 2 cannot exceed this starting point. If it does, it shifts to that, and that gets moved. And if that moves up and it breaks there, this is out. And we go back into that minor 4, and we'll be looking for likely higher. Okay, that's the all-time high right there. So you can see we're in the hood. And I'm not necessarily wanting to bring out that the alternate, which is that the market is actually in a minor 5th wave up. And we could very possibly create new all-time highs and still turn around and die hard, die really hard. So again, it's not bullish. I mean, it is in terms of the market's beginning going up and prices are accelerating and prices are you're gaining. And if you're long here, you're going to make it a lot. So you're going to make some good money. That's the name of the game. So again, tomorrow, a lot of things can happen. It's an expiration. Let's see what they want to do. Very often they did all the marking today. We might see some tomorrow. And then they get it to a level where everybody's like, okay, this is pretty cool. We're just going to try to hold it here. And we just sit and do sideways moves. That's also something that can happen tomorrow. But again, if it breaks 15,850, then wave 2, out, minor 2, back in 15,971. If it breaks above 16,251, minor wave 2, out. Primary wave B still in force. Minor wave 5 in progress. And I'll be updating everything over the weekend should that occur tomorrow. Has to be very, very powerful rally, folks. Consider we're closing at 15,677. 16,250, that's a 600-point rally. That would be pretty amazing. Not saying it can't happen, but it would be pretty amazing. All right, I'm going to wrap it up right here. Again, don't trade with this ingrained, I'm bearish, I'm bullish. Stay open, because a lot of these trades that are happening within these stocks is not really conveying that, oh, we're bullish on Apple, we're bullish on Meta, we're bullish on these, or we're bearish on that. Because I'll tell you what, Netflix was down $14 or $15. Is that, they're bearish on Netflix? Or has it something to do with how the options were trading? I say the latter. And that has been my point all along. What is really changing in our marketplace? And I did a whole presentation on this, folks. And actually, I think I may have, I should get it put on my YouTube page. Are derivatives the new underlying? Keep it in mind. All right, that's going to be it for today. Have a great trading day tomorrow. Have a great weekend. And the next Elliott Wave update will be on Sunday, the 17th of September.